Okay, everyone, welcome to this session on fundamental trading. I'm excited because I feel like we haven't done one that's specifically about this. And it's one of those things that we look at and we always talk about, oh, look, there's red folder news and, oh my God, this just happened. And what was that sharp move that just happened in UCAD and why did that happen? And a lot of the times it's because we have no idea what's happening in the news. And actually news or fundamental ideas play a huge role in impacting the markets and when we trade. So hopefully you've got your notepads and pens, because note takers are the money makers. And let's just get into it. So fundamental trading. What is fundamental trading? Fundamental trading is essentially looking at the markets and analyzing economics, social, and political forces that may affect currency prices. So the reality is that there are things in the market that will have a positive and negative or adverse effect on currencies and their currency exchanges. And as we are trading forex, we need to be aware of those things, okay? Now, like I said, yeah, the idea behind this type of analysis is that if a country's current or future economic status is good, then the currency is going to be strong. Hence why, with the US supposedly supposed to be the largest power that be in the world, the most of the currency pairs are pegged to the US dollar. But you know, economies are changing and progressing, and we're seeing changes in power happening on a daily basis. And so it'll be interesting to see how the rest of the year pans out in terms of the US's stronghold in that position. But in essence, a country's current currency is based on their economic power. Now, what are the key economic factors? Now, some of you might hear economics and macroeconomics and get a little bit like, all it means is that what are the key indicators that happens in terms of reporting, in terms of what's happening and in the world that will impact our trading and you and I every day. Now, there's high level reporting that helps to paint a picture of what's happening in the world. So, and they use these indicators to kind of say what the health is of a country in terms of the population and what the population are able to yield in terms of output and what we're doing in terms of making money and making the economy go around, okay? So forex market is ultimately driven by all of these indicators because they have an impact on the value of the nation's currency, okay? So knowing these factors will help. It will help you when you trade forex. So one of the first ones, GDP, gross domestic product. This measures the output of goods and services produced within an economy. So this is simply a high level index that measures what we're doing in terms of the things that we're developing and creating and producing and giving out to people in this country. Inflation. Now, inflation is an indication of price levels. So if prices are going up, it means that people can't buy or may not be able to buy at a higher price. Now, if prices go up and people aren't able to buy at a higher price, it often then leads to what? What do you think happens? When prices go up, what do you think happens to performance of sales? For example, you go to your favorite retail shop and you know you like one dish, and now that dish has gone up by £5 or $5. Are you gonna spend that $5 extra to get it, or are you gonna just say, nah, it's not for me? Like, how likely are you going to go for the more expensive choice? Yes or no? If you are gonna still buy it, put a number 1 in the group chat. If you're not gonna still buy it, put a number 2. Some rich people here, they're buying things. Prices go up. Cool. All right. Brilliant. Exactly. So the point is that typically when prices go up, it's an indication that people's purchasing power are going to fall because they can't afford it. So what economies or what governments tend to do, central banks tend to do, is try to curb the impact of inflation on the economy. So it's a double-edged sword, because at one stage it will give you the indication that yes, purchasing power is down, so it could technically give you a negative outlook on currency, sorry. However, it's also an indication that yes, governments are most likely going to step in and do something about that, because they don't want the economy to fail. So you'll often see that they will offset the increase in inflation to a reduction in a reduction in interest rates, in order to encourage people to spend more rather than save. And that's why you've seen interest rates staying at very low rates for a very long time, because we have been in that period of time for quite a while where the economy, they still need to encourage people to spend. So the next thing is employment. Now, employment or unemployment is a huge factor. I mean, it's deemed as like a secondary factor because it's not like a high level view of a country's performance. However, we see that the levels of unemployment do have a massive impact in terms of forex, because it showcases whether people are making money, people are living within a certain standard of means. It therefore is a reflection on the performance of a country, and ultimately the stability of that country's economy and currency. So if you have high unemployment, that means you have a lot of your population that are not working. If they're not working, then they're not participating to the GDP of the country, and therefore the performance of the country is down. So high unemployment indicates that prices are going to be affected adversely, so prices will go down. Low unemployment means that you have a country that's working really well. You have a lot of your population in the workforce. So therefore, your economy is booming, and you can handle that because you've got high levels of employment. So that's fantastic. So your prices of currencies should be on the higher end. And there's other factors as well. Spending. Yeah, so there's other factors as well, such as retail sales. So if you are in employment and things are going fantastically, you're going to probably spend more on new shoes or new clothes, and therefore drive up the sale of retail. When retail sales are up, again, it's a great indication of the health of an economy. Manufacturing index, if there is more demand, then more things need to be made. So if that manufacturing index is higher, then it means that you've got a booming economy, everyone is looking for things to be made and happy. Capacity utilization, are we using every element of products and services and raw materials we have available to us? Are we using all of our workforce effectively? Are we utilizing everyone at a high amount? If so, therefore we've got a fantastic working, booming economy. Now that's the ideal. Now, of course, if you watch the news, it is not always the case. There are certain things that are outside of our control, such as a pandemic, that is driving a lot of these indicators rather than what you would normally typically see happening in the world. Now, this is just a backdrop. And the reason why I wanted to kind of go, and this is not an exhaustive list, by the way, but the reason why I wanted to go through these key indicators is so I wanted to help you start thinking about trading in a more holistic manner, right? Trading, you've got to remember what we're doing when we're trading. We're trying to find the right time to buy and the right time to sell. Now, being able to understand these indicators will help us determine, is this a right time to buy this currency pair, or is it a good time to sell this currency pair based on the performance of that economy? Because investors are going to be heavily influenced by what's happening in the world. So yeah, we should take this into account. So I'm going to move on to the next slide. Understanding the news. So I've got a couple of examples of news releases, and I wanted to play a little game and just find out who believe, what you think the different articles that I've put together, what impact it will have on currency pairs and which currency pair you believe the impact will have. All right, so the first one, latest US non-farm payroll report on Thursday showed a much bigger employment increase than expected. The country added 4.8 million jobs in June versus expectations of 3 million. So, did this have a good effect on a currency or a bad effect? And what currency did this news impact? You write your answers in the group chat. What currency did this piece of news impact, and whether it was a good effect or bad effect? Okay, so if it was a good effect on USD, what do we expect to have happened to USD pairs today when this news dropped? Fantastic. Great. Great, exactly. Because employment was because the employment rate was much greater than expected, people would have bought because it showcased what? Why would they buy with employment increasing? What does that indicate in terms of the economy? Stability, yeah, fantastic. For stability, it showcases a healthy economy. You know, more people have money. Things are happening where people are coming back to a pre-pandemic level where people are working, people have money are making money, people are making the economy tick round in its cycle. Exactly. So this would have made prices go up. Now, let's talk about that in a little bit of detail. Now, when we see currency pair quotes, all right, let me get this up on TradingView. Give me one sec. Okay. So my computer is being incredibly slow. You would think, anyways, I'm not going to say, you would think I'm somewhere that I'm not. You think I'm in some remote country with no access to dial up or something, the way my internet is going, but I'm not. Anyways, so just bringing it up onto TradingView, and what I wanted to showcase is this. Let's look at you. Yeah, let's look at this. Okay. You guys see? Oh, you can't see my screen. 1 second. Cool. So USD CAD. All right, let me go into the 15. I think it was around 1 o'clock. All right, cool. So USD CAD, around the time of the news, we saw a massive, look how huge that is, a massive upward move, move when the news was announced of non-NFP. The reason why you see that is because USD is the main currency that's been quoted. So therefore, positive effect on USD is going to drive prices down. However, if you were looking at something like gold that's pegged to the USD, guess what happened to gold when that news dropped? It went down. I mean, obviously it went up eventually, but it dropped. It just, and we anticipated that drop. Why? Because USD, there was positive news with USD. So there's an inverse relationship. It's the second, because it's the second quote in the currency pair, gold would have, it would have meant that you were going to sell gold to buy USD, essentially. So therefore you see the negative, opposite. You see prices going down when there's good news on when this USD is quoted as the second currency. Now, if that makes sense, can I please get a number 2 in the group chat? So when USD is quoted as the first currency and you're expecting this to have a positive impact, you're going to expect prices to go up. If USD is quoted as the second currency, like you see here in gold, you're going to see it go down, the inverse. All right, fantastic. Cool, let's go back to the presentation. So that's example number 1. Second example. Investor sentiment getting a boost from news that a vaccine candidate being developed by Pfizer and BioNTech shows potential. An early stage human trial of one of the 4 potential coronavirus vaccines is developing. It showed the drug created neutralizing antibodies. The results, which were posted online, has yet to be reviewed by a medical journal. What do you think this piece of news had, and what market or markets, plural, do you think it would have impacted the most? Positive or negative news? What would you think? Is it positive? Is it negative news? And which markets or currencies? Oh, so do you think it's positive news? Do you think it's positive news? Give me some positives. If you think it's negative news, write negative. Cool, cool. Cool. So let's go through this. Now, we've got to, yes, it's related to the pharmaceutical industry. However, we've got to put it into context of what's happening in the world and what people are concerned about right now. Now, the coronavirus is a pandemic. So yes, it will be driven by what's happening in the pharmaceutical and medical industry, but it's going to impact every single other industry. It's impacting the world on a global scale. It's a global pandemic, right? With that said, any kind of like news around it is going to drive markets. It's going to drive all markets. It's going to impact everywhere. Now, this news right here doesn't necessarily give you much indication, but all it does is give you hope, because it says there's potential. So therefore, if they are testing a vaccine that sounds like it's going to give us good results, that's going to increase investor sentiments that, yes, you know what, we're on track towards having a cure. So therefore, we're on track to seeing us coming out the other end of this. So news like this tends to have like a whipsaw effect. What that means is that you'll see prices go up and down. But typically news like this, it's all about sentiment. So most investors will look at this and say, you know what, there's potential, that's based on how things had been going before, that's actually really good. I'm happy to see that we're moving in the right direction. So therefore, I am more comfortable taking certain investment choices. So you won't see massive slumps or massive huge uprises, but I believe you would see, typically you will see some movements to the upside when you see kind of news that has potentials, give you indications of good things to come, right? So sometimes it's not as, and the reason why I chose these two articles is because sometimes the news can be super clear, right? Like the employment news, where you know what, if employment increases, then prices are going to go up in terms of currency. But when it's all about sentiments in terms of feelings and what people think, then you have that's up for opinion, right? It's an opinion piece. So then you have room for negotiation. Some people may, and that's exactly what we saw in the comments. Some of you said it was negative, some of you said it was positive. So it's really important to utilize this news, but by using your confirmations to govern how you will trade as well. Okay, so one other big news piece that also has a massive influence on the markets. Can anyone guess? What are your thoughts? Do you think it is? Put in the comment section what piece of news or what news feed do you think has one of the largest impact on what happens in the markets? Any ideas? Just doesn't matter whether you think it's a wild idea or not. Put it in there. Let's see what people think. Crime, okay, crime. Politics, yes, politics. Anything else? Banks, financial, yeah. Pandemics, property, yeah. All of these things, by the way, will have an impact. If crime levels are increasing somewhere, of course, it's going to have an impact. If there are natural disasters, that's going to have an impact. Protests, 100%. The protests did have a huge impact, especially on specific companies. So yes, those things have an impact. But somebody said it. Somebody said it, and I'm gonna just explain what politics. And there's this one guy that when he types, he literally, by typing one sentence, can change the course of any trade. Trump. The president of the USA has so much influence on what happens in the world. And it shouldn't be taken for light. You know, most times people may think he doesn't know what he's doing, but I think he's a very smart, intelligent man and knows exactly how to push and influence certain things, because he will say things for reaction on Twitter. Well, now that his Twitter has been disabled, I don't know whether he's using Twitter anymore, but he will say things or do things that will create headline news, and those headline news moves market. They move the market. And it's not just Trump, but it's Trump consistently. Other political leaders, when they say things, especially if it's going to have an impact on our relationship with other countries, those will move the prices on currencies. Why? Because remember what we said, currencies are impacted by the economy and how we relate to other economies, our power in terms of our price to the other economies. So yes, just remember our smiling President Trump. Okay, so useful facts. We've got CNBC. In fact, before I put these up, let me actually come in here. What sites do people currently look at when they go and look for news? Out of interest, CNBC. Nice. Anywhere else? Bloomberg, Forex Factory, CNN is a good one. Investing.com, that's a good one as well. Yeah. So those are all good. Those are all good ones, and I use those ones as well. So I put a couple on the screen, but it's not an exhaustive list. So CNBC, Financial Times, FXS, especially for NFP, because it's like a live stream of people putting their opinions of what they think is going to happen just beforehand based on the analysis, etc. Bloomberg, FX Daily. Oh, wrote that twice. That was supposed to be investing.com. Investing.com. There's other platforms as well. There's actually even podcasts. I will send a link to the podcast I tend to listen to. 1 second. This podcast simply gives like a really quick roundup of what's happening in the market in the morning. Called News Quark. Let me just put this. 1 second. I'll put this in the chat. But yes, there's so many different resources that you can go to listen and look at news. But I just wanted to walk through some of these sites. And before I end, I'm going to show you, we're going to go through FX Daily and also FX Daily Calendar. I know some of you may already be familiar with this, but I think it's a great indicator to showcase up and coming news to help you. So let me just share my screen. Cool. So you can get like a version of this on your phone. When you go into the economic calendar, it shows you, if it decides to load, it shows you up and coming news, and it also categorizes the news to tell you whether it's going to have an impact, high impact, medium impact, or low impact. So, for example, if I wanted to just see high impact news, and I selected the high one, okay. Jesus, give me strength. What's going on? Come on, show me up. Guys, I promise you, my internet is not normally this bad. Anyways, okay. I think you get the gist, right? Come on. Right, okay, it's frozen now. But I think you get the idea. You can select the high, and it will show you what news is coming up, and it will also tell you what potential impact it can have, that piece of news. So I scroll down to, right, cool. So here you can see it gives you like an actual, oh yeah. Come on. It gives you the forecast rate, the actual and revised rate. Now, what happens is typically before the news hits, it will give you what the forecast is. And the goal is to either be higher or lower than the actual, and it will tell you what would happen if it is higher or lower than the actual. And it also give you a summary of what that piece of news is. So NFP comes out every first Friday of the month. Except obviously today, it came out today because there's bank holiday tomorrow in the States. And it tells you whether it will have a positive or negative effect should the actual be higher or lower than the forecast. So this is a really good calendar to go and have a look at when you start your day, just to see if there's any news that may potentially impact your trades for the day. So yeah, that is pretty much it. That is what I wanted to go through today in terms of economics, the economics of trading, fundamentals, using fundamentals to your advantage. Now, one thing I tend to do, I tend to check CNBC, Bloomberg, and investing.com, and also the News Talk podcast in the mornings, just to have an idea of what's happening. Podcast is like 5 minutes, 10 minutes, roundup of everything that's happening in the economies globally. So you have a good idea of what's going on. And then I start my day. So I know whether I'm looking for buys or whether I'm looking for sells based on the sentiments of the day starting in terms of news. Yeah, that's how I tend to trade. I hope this training has been useful. It's a short and quick one, but very, very important one, because everything is driven by what's happening in the economy. So have an understanding about it. We're going to do more sessions like this and kind of break it down a little bit further in terms of key indicators and what we can, how we can potentially foresee what's going to happen and get ahead of that. But I wanted to first do an intro session just to kind of explain first off what these indicators are and high level try and showcase the impact they can have on our trading. But yeah, that is it from me. Thank you guys for tuning in. And yeah, have a blessed evening, and I will speak to you guys soon. Take care.